Hey dividend investors, today we are going to be talking about Warren Buffett and his top 3 dividend holdings. His top 3 dividend holdings is Apple number 1, Bank of America number 2, as well as Coca-Cola number 3. Are these good investments this year? Also, are they good investments for the future? Let's get down and let's check out each one of these 3 individual stocks, and I hope that you enjoy. Make sure to hit that like button and subscribe. Okay, so according to CNBC, this is the list of his biggest holdings. Warren Buffett is one of the richest people in the world, and he is a very savvy, smart investor, so we could all take lessons from him. Let's also keep in mind that he just recently made a huge investment into Chevron as well as Verizon. While they are not the largest companies that he owns, he does consistently invest in those companies right now. Let's look at Apple first. Is Apple a good investment? Well, Apple is literally the biggest company in the world, and what we can take from that is, they've got a lot of products, and they've got a lot of new products coming out soon. Potentially the iGlass or Apple Glass or whatever you want to call it, and potentially the Apple Car and compete with Tesla. They currently do not pay a massive dividend. They do pay a 0.63 dividend, about 82 cents per year, every single stock that you own. Now, that dividend used to be percentage-wise around 1%, but again, they just haven't raised their dividend for a little while. Their market cap is an insane $2.18 trillion. They are literally bigger than a lot of countries. From there, they also have a 1-year analyst target of $151, which is around a $22 increase from where it currently sits today, which is roughly around 17% upside according to analysts over the next year. From there, that would be a great investment. If this comes true and you can get a dividend of 0.6%, which is not necessarily better than actual interest in a bank in a normal time, but currently it is better than interest in a bank, and getting a potential 17% increase in value, that would be fantastic. Of course, I never like looking at analysts' targets because, again, they may be just trying to pump their own stock that they hold and to sell. So that is why I never look at that. However, their average volume is 103 million shares average per day, and the last trading day they were at about 87 million. So it's a very liquid stock for us to get into. Its current 52-week, 52-week range is between $53 and $145 per share. Wouldn't have been fantastic to get it at that price, but it's currently getting close to its 52-week high. But again, that is never a guarantee about what happens in the future. As we can see on this chart, it's had a pretty substantial ride up to the top. Now, something that I do want to point out is when you start making a line, it is currently touching the low point of that line. Something else that I like to point out is the fact that this is starting to become an upwards flag, which could be a bit bearish in the short term, but in the long term, this is a fantastic company. It's had a history of continual equity growth, but also something else that I really like about Apple is they do buy back shares so that they can artificially increase the stock price. What I dislike about that is they are helping you basically increase the stock price, but the downfall is they are not paying you cash in a form of a dividend. It's not a very high paying dividend stock. Now, when it comes to earnings, it's actually been pretty good. They've beaten all 4 estimates over the last 4 earnings calls, which is fantastic. That's what you want to see. They have consistent growth. Now, of course, they've had a couple of years where they have had some not so great financial growth, but at the same time, last year was fantastic for them, and I am going to say that 2021 is going to be another fantastic year. And the reason why I'm thinking 2021 is going to be another fantastic year for Apple is because there's going to be still a lot of people working from home, and when that happens, computers, cell phones, those things get sold a ton. Bank of America is the second biggest holding that Warren Buffett holds. It does have a 2% dividend, which is great. That's a lot better of a dividend than Apple. And I used to hold Bank of America as an individual stock myself. I bought it way back when it was around $18 per share, and I sold it around $32, so I did pretty good. However, I do currently technically own it through an ETF, and the ETF that I currently hold it in is ZWK. And with that dividend, or with that ETF, it's got a massive dividend because of the fact that it's a covered call ETF that you can purchase on the Canadian stock market. From there, its 1-year target is $36, so it's pretty darn close to its analyst price target. And on top of it, its 52-week trading range is right near the top, so this could be a scary stock to get into. There may be some downside coming to it because it's near the 52-week high. But at the same time, the U.S. economy versus the Canadian economy, I think the U.S. is going to be recovering faster and earlier than the Canadians when you start taking away the potential worries of interest rate rises, as well as the potential of the economy just exploding huge, which will then create a recession. But we're going to be leaving that to another video. Its volume is fantastic, 49 million shares on average. Last trading session, which was Friday, was 53 million shares, so not bad at all. A fantastic stock. Over the last 5 years, we can see that it's pretty well stayed within a trading range. And of course, right now, it's near the top of that trading range. It's had some massive support and resistance at that roughly $27.50-ish range, $27 range. So if it was to pop back down, I wouldn't expect it to go any lower than $27. But at the same time, if it can get above 35 and change, then it may explode a bit higher as well. When it comes to its earnings, it has had a miss in the first quarter of last year, which in my opinion, there was no real excuse for it. However, I can't remember back then, but I would assume that that could have been to set aside provisions for potential loan losses when it comes to the pandemic that was coming up. From there, it has had 3 beaten quarters, which is good. And of course, last year's revenue was lower and earnings were lower, but still stayed in the plus, which is good, especially considering how bad last year really was. And of course, from 2018 and on, it has had a decrease in revenue, but I would assume once the economy comes back on track, the earnings and revenue is going to skyrocket. That's usually what happens when interest rates start going up again. Coca-Cola is another fantastic company. I personally do not own it, as far as I know, in any ETFs, and I also don't own it as an individual stock. It does have currently a 3.25% dividend, which is great. That's a lot higher than Apple and a little bit higher than Bank of America as well. Coca-Cola is an interesting company because they don't just do Coke, they also do other beverages like energy drinks, and those will start becoming big once again, once everyone starts going back to work. Their average volume is 17.7 million shares. They've traded at 16 million the last trading session, so it's consistently high. And then from there, its 1-year target, according to analysts, is $57, which is a little bit of an increase. It's roughly, in my quick math mind, about 12% increase from where it's at right now. And its market cap is $215 billion, which is huge. This is going to be a nice, solid company to own. From there, when it comes to the chart, its 5-year chart is quite interesting. So it did top out at $60 before the whole coronavirus pandemic, and that was literally just before it all happened. It tanked, and it tanked hard. And I wish I grabbed it up, and I didn't even think of it. And it was down to in that $40 range. That would have been a fantastic buying opportunity. Its dividend would have been absolutely ridiculously massive, and it's had a nice ride up. And I would assume that it may have a nice ride up to $55 pretty soon as well, in my opinion, unless it drops below that trending low line. Then that's at that point would be a little bit scary, and I would wait probably a few days. But again, this is a pretty solid company. When it comes to its earnings, it has had 4 straight quarters of earnings. Of course, it had the massive beat here because I can assume that there was a lot of people buying Coca-Cola just stuff in general from the store, because a lot of people were going out to grocery stores and buying up a ton of food and beverages and things. And of course, we've seen that as well in their earnings. Of course, it was a bit below 2019. However, when it comes to the earnings side of things, it's still a killer versus 2017 and 18. So I think this is a great company for the future. I hope that this video has helped you become a little bit of an interested investor into dividends, but also I hope that it's given you some investing ideas into what and why Warren Buffett invests in. Anyways, remember, don't ever trust a random person on YouTube. Make sure you do your own research and homework. I would hate to have you make a wrong decision from anybody on the internet, so make sure to do that yourself. And I will see you guys again in my next video. Hit that like button and subscribe.